Good morning, everyone. Welcome to the Lock in Your Success Options Trading for Income Weekly Update for July 27th, 2015. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. There is a significant chance of loss while trading options, so please be aware of all your risks prior to placing any trades. And also note that we are using hypothetical computer simulated trades in the presentation. However, they are believed to be as accurately represented as possible. If you're watching this on YouTube or some other venue, come on over to our website, join our mailing list, get your free report, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar at lockingyoursuccess.com. Also, check out our programs. We have the Super Simple Spread Trades, the M3, the Bearish Butterfly, the Rock, the M21, and now APM Squared is officially released as of this morning. We are doing a 10% off discount until August 5th. So we're giving people, and again, this is to the general public now, giving people 10% off until August 5th. It's a fantastic program. If you talk to anybody who's been in it or has taken the course, we've gotten fantastic feedback from it. There's also some buzz about it on Capital Discussions. So really encourage you to do that if you are very familiar with the M3. In other words, if you're not familiar with the M3, then this isn't for you. So this is meant for as a higher level course for someone who's been through the M3, and especially if you've been through the Rock and you're doing M21s. Fantastic opportunity for you to go ahead and do this. And I just got a comment that yes, APM Squared is really great. Thank you. Also, stay tuned for our programs currently under development. We have the Trading Triangle book, which I'm working on. I'm not sure when it's going to be done. Aiming for some time this fall. It may take a little longer than that, which would be followed by the online Trading Triangle program. We're also looking at some other things that could jump in front of that for newer traders, and also some programs that are going to be more helpful to people who are maybe struggling with some of the other programs that we have as support, as a cheaper alternative to the one-on-one coaching. So we're looking at some other stuff too, but as of right now, this is our scheduled stuff, and also looking at maybe some directional stuff coming up. So lots of good things going on here in the background. Also, if you have not joined the Hawaii Lockup Challenge 2016, we encourage you to do that. It's all for good fun. Come on, just send your information to Sherry, what type of percentage return that you're looking for. And we would like, if you're going to do this, we would like to have that percentage return on the maximum planned capital that you plan on having in the trade, not necessarily what was in the trade. Also, you could also do it on an account value. What we'd like to avoid doing, which a lot of people do in this business, is reporting results on whatever happens to be in the trade. And that's not really representative of long-term success there, because we know with a lot of times with these trades, you might have a lot less money in it when you win than when you lose, which means a 10% gain does not equal a 10% loss. As a matter of fact, the 10% losses are usually much more dollar-wise than the 10% gain. It doesn't really represent what's going on. But anyway, this is all good fun anyhow, so we encourage you to do that too. All right, so let's move on and take a look at what's going on in the market. Last week I was thinking that the Russell was going to come down to this imaginary new trend line that I had developed off of the previous up channel, which it did, and it stalled there for the day, and then proceeded to break down to this more primary support level. Looking at the Russell, I mean, that's not that big of a surprise. I did think the market was more bullish than that, and the reason I thought that is because we turned earlier than expected here, which is an indication that things are a little bit more bullish than they should be. But again, this is not that much of a surprise here to drop into this level. So it also wouldn't be a surprise to try and come down to this 1210, because that's essentially the channel, right? So we're in this sideways channel from 1210 to approximately 1280. A touchdown here wouldn't be a big surprise. I wouldn't expect anything worse than that. Looks like we are getting a gap down this morning. I would think that this gap down is just going to be kind of a flush out move, and then the market's going to go higher. So intraday, we may come down into this 1210 area. I'm thinking we're more likely from there to rise. And the reason is a couple reasons. First is the NASDAQ. Realistically, I think that, or to me, at least to me, it wouldn't make sense that the traders aren't going to go for all-time highs here in the NASDAQ, which is around 48.35. And any move under this level here, which typically would be very bearish, right? Usually if we're going to have a close underneath this new support level, that's going to be very bearish. However, like I said, even if we do that, I'm still thinking that the traders are going to try and push this thing up into this 48.50 level. So that being the case, it's going to tend to drag the rest of the markets higher. Again, that's, like I said, that's my opinion. Also, it's not a surprise that we're going to try and retest these lows that we put in here on back in the early July on the Dow. So the gap down this morning, again, makes sense from that perspective. And then, of course, the SPX is kind of hanging up a little higher than it should be. So, again, it makes sense it may test a little bit lower here, maybe tag the 200-day moving average again. So even though this is coming down, I'm still shorter term bullish on the markets. I don't necessarily think the Russell and the NDX or the SPX are going to break out higher. I do think the NDX will break out higher because I think that's going to new highs, but that may keep the other indices are likely to stay in their sideways move they're doing now. So that's what I'm thinking going forward. All right, so let's take a look at what we have going on with the positions. But before I do, I just want to mention last Tuesday when we did this webinar, I was just back from a training that was approximately 100 plus hours in 9 days. So, and I just got back in and I missed some things on the update. I also forgot to record it if you haven't noticed. So I had to do another recording later on Tuesday and post it on Wednesday, so that I actually had a recording for last week. So I was just a little bit out of sorts there. So just bear with us on that. I'm a little bit more organized this time, but I'll just fill in what I missed and we'll go forward from there. So last week I was talking about this bearish butterfly trade for August, and essentially what I typically do, this has a 30% profit target, which is technically $15,000. But when I get in a bearish butterfly and I get a month like this, where essentially I had to do almost nothing. Let me just put these in. Where essentially I had to do nothing. And I just sit here. If that trade gets up 20% of my planned capital, which if you look at the graph is more than 100% of the actual capital in the trade, to me that's pushing the trade quite a bit. And I always said if I'm near my profit targets, I like to exit with the marble at the top of the hill, so to speak. So that being the case, I'm typically in this type of situation, I will pull the trade at a $10,000 profit, which is what happened last week. So on Thursday, when the market came down right into the middle of the position, the end of the day, up over $10,000, this trade was just closed. So that's in the history books for this month. We're taking a 20+% profit for the bearish butterfly in August. So that's what we have there. If we take a look at our following trade here, which is going to be our M3 trade, let me just go to today. The August M3 trade had no adjustments last week. We're near our maximum delta here, and I think it tagged over maximum delta a couple times during the day. So if the market holds down today, then this is going to be due for a rollback. But as we stand right now, there were no adjustments since the last update here, and this is what this position looks like. So let me give us 2 lines so things look a little better. We do have a bit of a gamma trend developing here issue, but I'm not that concerned being that far behind. This is $7 intervals, so it's 7, 14, 21, 28 points before I even really run into any kind of an issue with a T+0 line issue. So I'm not typically going to be overly concerned about that, and I'm going to let that sag a little bit. But like I said, this is going to be rolled back today if there's any sort of a decent down move that sticks. Intraday, I'm generally not that concerned. If I have a question, if I put an M3 on with high volatility, won't you get the profit zone quicker if there's a volatility crush if you put the trade on, if there's a volatility crush? If I put the trade on in low volatility, it seems to take a very long time to start showing a profit. Well, there's a combination of volatility and price movement going on. Generally, yeah, there's more profit to be made in high volatility markets. In other words, these types of trades will do better with higher volatility levels. If the volatility drops and you don't get a huge up move, you'll gain value very quickly. If the volatility drops and you get a huge up move, then it's not going to benefit you at all, because realistically, if I'm here in high volatility and I go here and my volatility drops a lot, even though I'm very negative Vega here, I'm not particularly that negative Vega here, right? Which is one of the things that people tend to look at when they put positions on, is they say, what's my Vega, and they assume that it's constant in the position, or they don't assume that, but they, to put it more accurately, they delete the fact that if the volatility changes, we're probably going to get a significant price move. And if I get a significant price move, my volatility here is not necessarily negative. It may be positive, which is essentially saying my T+0 line's crushing over here while my volatility is dropping. And if my volatility drops and the price goes here, then my negative Vega here isn't going to help me any. Hopefully that makes sense. But same thing on the downside. You think you're carrying a lot of volatility exposure, but the reality is if we get a harsh down move into here, then you're not negative Vega back here, or at least not very much negative Vega back here in this position. Most of your negative Vega is carried in the center of the position. So you need to keep in mind where the market's going when we look at stuff like that. All right, so will I roll back or just put the vertical back in plus 10, 12, 20, 12, 30s? Oh, okay, yeah. No, I would probably, if the market goes down from here, I'd probably roll back because I'm gonna be near my short strike anyway. I'd probably roll. I would tend to roll it. If I just take this vertical back, then I'm gonna put myself in a real gamma issue. Right, this isn't the only choice that I have either, by the way, within the M3 program. But I could put this back. I would make myself more negative delta. I could come back in here, but now I'm just in a regular old butterfly that is going to be very sensitive if the market really takes off to the upside. So, yeah, I mean, there's ways I could fix that. I could start correcting that back out by adding calls in here, right, and kind of flatten myself out. Of course, that would be too much of an adjustment at this particular thing, but if I had a larger position, I might be able to pull back 50 of these and add a call in, kind of balance off my upside risk and help with my delta to the downside. I could certainly do that. I could do the technique where you roll some of these back and you roll some of these 1270s in to deal with the upside. So I could do all that and stay within M3 concept. This here is kind of leaving an M3 trade. So this is no longer, as far as I'm concerned, no longer in M3 concept because I'm carrying too much gamma for that. Hopefully that makes sense there. So let's, so technically the most, according to the guidelines, beginner guidelines, the most likely thing to do here would be to just roll back, probably to 1200 or maybe even lower, depending on where the market goes. All right, so let's go to That's our M3. Let's go to our August rock trade, which also, by the which I did not show you last week in the live update, but I think I put it in the recording. Rock trade had to be entered on Wednesday. I didn't because that was Tuesday, right? So if you looked at the recording, I did this on Wednesday. I entered a rock trade in this position here. Let's just go back to Wednesday. So I entered 10 1230s and 5 1270s, put myself at around minus 180 delta, which is essentially exactly where we want to be with a rock trade entry. And there were no adjustments from that point. The market just came back down. So let me go to here. We are nearly at an adjustment point here. Actually, it did, again, this is another thing, it popped over intraday. If we get a continued down move, it's likely we're going to hit a downside adjustment to this point. So we will we'll roll the butterflies back here and put this in a safer position, as they say, for the increasing volatility that we're getting. But like I said, I did have our normal rock trade entry, and this was the position here. Let's see, August V Condor. Well, that trade is not faring that well. Let's which is kind of has to be expected, right? We've had no troubles with the V trade all year. Now under these conditions, it's getting a little bit more problematic. Not terribly so, but this trade here is not going to win anything this month. This is what we looked like as of the last update. If you remember, I actually ended up pulling the V out. Had I not done that, this would actually be in better shape. But according to the guidelines, it just barely triggered pulling that V out. So it did get pulled out. Coming forward, we had, I believe, Thursday, the 14th, the 23rd. Okay, so I guess, yeah, so it would be Thursday. I bought back 3 more of these 1180s to deal with a delta issue. We are only allowing a positive 50 delta here on Thursday. That actually happened, and this, I ended up buying back 3 of the 1180s, and that ended up, we're down about $1,500. That ended up putting us essentially, if I expire this, at a loss of $354. Hopefully we'll be able to hold this position here and not do anything else. Otherwise, we're essentially just going to trade ourselves out of the position. So here is, once I get down, realistically, if I have to make another downside move, I'm likely to just close this out. So I have a question. Am I correct seeing 60 point 1210, 1270 on the call butterfly rock trade? Oh, you might be. I could have made an error there. So let me go back to the rock trade. 1, 2, 3, 4, 5, 6. Yes, you are correct. So that was an error on my part. Well, why don't we just do this? Why don't we trade it out that way? Because we all do make errors in our live trading, and this was an error that I made on entry. So that's too bad because it worked out so well on the delta. However, though, I probably would have been better off had I had it at the 1220. But anyway, yeah. So there's an error here on entry. So we'll note that, and we will move forward with that. Let's go back to the V Condor. So this is where we stand on the V Condor. If we go to Friday, it's showing us down $2,000, and it's still within our maximum loss numbers. Our maximum loss numbers here, I think, are $5,000. So not a big issue there. Like I said, if the market continues down hard, this will eventually just close itself out. If the market returns, we'll have a very small loss for the month. All right, let's go to, let's see, those are all the August trades. I did have a September V Condor that I did not show on the live section, but I did show on the, I did show this on the recording of last week. It was entered on the 17th with short strikes at 1190, short strikes at 1320, and a straddle at 1250. And it looked like that. Was doing perfectly fine until we had a couple of huge down days. And I ended up on Thursday. Oh, actually, look at that. I goofed up. I actually put August in. Like I told you last week, I was a little out of it. I was a little tired. So we're going to scrap this, and I will show you a proper V condor on. I'll show you a proper V condor on next week's update. So my apologies for that. We'll have to redo that trade. So the other things that we did, hopefully I entered these in the right month, are a September bearish butterfly example here, which is was put on 1,200 butterflies with 50-point wings. Looks at a position that looks like that. So that was our entry position for that, and then our entry position for our M3 was very similar to that, with the exception that we had actually 11 butterflies on, and I added a call up here at 1070. And this is what our September position is going to look like right here. So we're pretty much all straightened out with our trades, except for the darn September V condor entry, which I made a mistake there, and I will correct that as we speak. As far as our results for July, we had a 2.2% loss on the bearish butterfly for July. Obviously, we're going to have a 10% win on a bearish butterfly for August. It's going to bring us up into the 72% range for the end of August. This trade is doing pretty much normal for the year. We're expecting a 90% return on our planned capital, and we're pretty much on path for that. We have our M3 trade, which is running about 33.5%, slightly below what we're expecting for the year. We're expecting to do 60% for the year. That's still a very realistic number for us going forward. Rock trade, we are expecting about 120% for the year on our planned capital. As of July, the close of July, we're up 91.2, so that's higher than normal. Which means I would expect some sort of losses in the next couple of months on that trade, but we shall see. We have our V trade, which has been doing spectacular for the year until August. August is going to be a small loss. September, I would imagine that with the September options, when we redo this, that down move is not going to hurt that as much. I was actually very surprised that down move was that painful on the trade. It shouldn't have bothered it, really. So we'll see what that is, but we're probably going to take a small loss here, and we'll see how September works out. I would imagine September is going to be fine. The expected on that, again, is 60% planned capital, which is we're higher than we should be here for this particular trade as well. So far, 53.7% return on planned capital year to date, 28.7 on our entire account, because our entire account's 2 times our planned capital number. So that comes out to that. So things are going good this year. Everything's going perfectly fine. I don't know. Are there any questions, or are we ready to wrap it up? All right, well, it looks like no additional questions this week. So I hope everybody has an awesome week trading, and we'll see you next week. Thank you.